Is there a free meal on Wall Street? There is no free meals on Wall Street. You all should figure that out by now. If you've been trading, investing, there are no free meals on Wall Street, okay? And we will figure it out, and we will take advantage of it, just like it happened last Thursday. 540 on MicroStrategy to 380 in the same single day, wipeout, right? Imagine. At 540, by the way, there was a transaction done. Somebody bought some, and somebody sold some. So whoever bought it at 540, I feel for you. I'm probably out by now. But my point is there is no free meal on Wall Street. So here's the deal. What is the downside in all of this? What could happen? What could go wrong? I mean, when you're investing into these things, you guys, instead of having this YOLO attitude, you guys should figure out what could go wrong. What could go wrong? Okay? I will answer all the questions. I see the chat moving. I will answer them one by one. Well, I'm going to put that out. I also figured that part out for you all. What could go wrong? All right. Okay. So here's Mr. Michael Saylor in front of the famous bull on Wall Street, right? And what happens if MicroStrategy can't sell enough Bitcoin to repay lenders? Well, yeah. So the important thing to understand here is when MicroStrategy is issuing unsecured, by the way, unsecured, meaning not attachable to the company assets, because one of the company's biggest asset is Bitcoin, physical Bitcoin. And MicroStrategy is doing it with physical Bitcoin. He's not doing it. Michael Saylor is not doing this with leverage like a lot of knuckleheads are doing. So there's no leverage. It's 1-for-1. So he has 387,000 Bitcoin at 100. That's $38.7 billion, period. So there is not going to be a margin call, number one. But more importantly, when he just issued $3 billion in convertible notes at 0 interest rates, okay, with a conversion at 50% higher than the stock price at the moment, at $655 a share. So some institution lent Michael Saylor money, $3 billion worth, to go buy 55,000 more Bitcoin at 97,000. All right? Okay. Well, this institution has done their due diligence. So why did they lend him money at 0 interest rates for 7 years, by the way? And he has done this, for the last month or so. He has done multiple of these convertibles to the tune of $5-6 billion. All these institutions who are lending him this money are institutions who cannot legally tap into Bitcoin. Legally meaning their corporate charter won't allow them to go buy physical Bitcoin or participate in this market. Well, they want to participate. So what is MicroStrategy has become the proxy for this? FYI, the corporate bond market, but let's take out, corporate bond market is into trillions, giant. But let's look at convertible bond market for corporations. It's about an 8 to 12 trillion dollar market, trillion with a T. What is 3 billion, right? So what are these companies doing, these institutions who are lending MicroStrategy the money? They want to buy the shares, because here's the math, people. Bitcoin 100,000, MicroStrategy 400. I think it's too high. I think it should be like 3 to 350. But let's say it's at 400. Where is MicroStrategy, okay, if Bitcoin is 200,000? 800, period. I gave you guys the math. Multiply the amount of Bitcoin without them buying any more, okay, which they will, without them buying any more, is 800. What if Bitcoin is 500,000? MicroStrategy is at $2,000 a share, okay? What if Bitcoin is 1 million? And Michael Saylor last week said he thinks Bitcoin is going to 13 million in 20 years. I don't even want to go that far. What if it's 1 million? MicroStrategy is worth $4,000 a share. And what is the conversion price of this institution over the next 6 years, which they can convert anytime they wish, as long as the underlying issue price is above 655, right? Think about it. MicroStrategy is at 200. Bitcoin is at 200. MicroStrategy is at $800 a share. Well, their conversion price is 655. They're going to convert 650 to 800 is 150. That's 40%. They're going to get a ridiculous amount of return. So what they're doing is Michael Saylor figured out he can be the conduit for this gigantic corporate convertible bond market. He's issuing these convertibles A lot of institutions are jumping all over it. They're getting upsized. In fact, they're oversubscribed, right? Okay, so but you're going to say, well, Serge, it's all positive, all positive. What's the downside? Well, here's the downside, okay? So despite the widespread acknowledgement that MicroStrategy has issued a tremendous amount of debt to acquire most of its Bitcoin, right? There is, a lot of people say there is no liquidation risk on this debt. Well, there is no liquidation risk because it's unsecured, first of all, right? And so they can't force Michael Saylor to sell Bitcoin. Like, let's say Bitcoin drops to 50,000 from 100,000. That's the downside. Let's calculate that, by the way, people. Okay, so 50,000, they hold 40,000 Bitcoin. That's 20 billion. 1.5 to 2 times of 20 billion. Let's say 2 times is 40 billion. Right now, MicroStrategy is at 95 billion value. If it drops to 40 billion, MicroStrategy is going to be about $200 a share. So the downside is there because it's completely attached. The share price of MicroStrategy is completely attached to Bitcoin, completely, okay? Although the nuances of the term liquidation are important, there are people who honestly believe that MicroStrategy cannot default on its debt no matter how low the price of Bitcoin goes, because he's not doing this on leverage. He's buying physical Bitcoin, right? So, but since MicroStrategy, since there's a maturity date on these convertibles as well, yeah, he's not paying any interest, but there's a 6 or 7 or 8 year maturity on these notes. Well, let's assume Bitcoin goes to 50,000 and stays there. Well, these companies lent MicroStrategy money with no interest, and the stock at that time will be 200, which is way under, right, the current price, or their exercise price, which is $600 to $650. Well, Michael Saylor has to pay these people back, right? Because the bond's maturing. At least the investors will get the principal back. So the worst case scenario for Michael Saylor is a protracted bear market. I don't see that happening in Bitcoin. But if Bitcoin stays below MicroStrategy's cost basis for many years, by the way, MicroStrategy's cost basis is 56,700, okay, at the moment, with the last purchase of 55,000 Bitcoin at 97,000. Obviously, to me, all these buyers of these convertibles are bullish on Bitcoin and they want to participate. They legally cannot because due to their charter, they're doing it through MicroStrategy. They're lending him the money. Michael Saylor is going and buying the Bitcoin. Bitcoin goes to 200. MicroStrategy will be 800. Bitcoin goes to 500K. MicroStrategy will be $2,000 a share. And they're going like, this is how we're going to play it. I think what Michael Saylor is doing is not a Ponzi scheme. Again, to the last gentleman's tweet, boneheaded tweet, is just, look, people are offering him money. He wants to buy Bitcoin. They're offering him money at 0 interest rates. They're believers in Bitcoin as well, but they cannot participate in the game, and that's how they're participating. So I hope I made this all clear. If I didn't make it clear, please go watch the video, put it in the comments when you watch the video, because I will put this out separately. I think what Michael Saylor is doing is brilliant, right? People are giving him money to buy Bitcoin. That's what he wants to do.